This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Open-Top Scrap Gondola Trailers, July 15th, 2019. U.S. steel production fell to 1.847 million tons, a 10-month low on a slowing economy and increased imports taking market share. Oil rose to $60.36 a barrel as OPEC and others worked to limit production to keep prices higher. The International Energy Association, the IEA, said despite these cuts, oversupply could continue into 2020. U.S. oil production rose to 12.3 million barrels per day, matching the recent all-time record, while continuing to make the U.S. the highest oil producer in the world, despite having only about the 10th most proven oil reserves. Last week's oil rig count fell to 784, an about 18-month low and less than half the high of 2014. But with technology, the U.S. continues to increase output with less oil rigs. Iron ore rose to $120 a ton, near the 5-year high on good global demand and continued supply disruptions in Brazil. Scrap steel #1 heavy melt fell to $229.67 a gross ton, a multi-year low on a slowing global economy, lower exports, and less U.S. demand. Hot-rolled coil steel rose to $27.25 on steel mill price increases to help offset the almost 5-year high iron ore prices. Copper rose to $2.69 near multi-year lows as hopes of growth hit the market on lower interest rate expectations. Aluminum rose to 81 cents, also remaining low on markets looking for growth in the economy. Cardboard scrap OCC was steady in the Southeast at $35 a ton, the multi-year low on slow global demand. The Eurozone, whose economy is similar in size to the U.S., had its May industrial production fall 0.5%, the 7th month of contraction, with Germany falling the most at 4.3%. China, the U.S., and the Eurozone are all slowing, which is why there are expectations of lower U.S. interest rates in July. China's second quarter growth was announced at 6.2%, the slowest growth in 27 years. But 6.2% is double the U.S. growth of 3.1% last quarter. China's June trade surplus with the world rose to a 7-month high. China's surplus with the U.S. also rose, which means it was worse for the U.S. as China exported 1.3% less to the U.S., but China's purchases from the U.S. plunged a huge 31.4%. That's 31.4% down purchases from the U.S. China's purchases of items like soybeans surged from Brazil instead of China buying from Americans in the Midwest. U.S. inflation fell to a 4-month low of 1.6% as energy prices plunged 3.4%, with gasoline dropping a big 5.4%. Food inflation also fell to 1.9%. But core inflation rose to 2.1%. Core inflation excludes the volatile food and energy sectors. Core inflation is the key measure the Federal Reserve is trying to keep at about 2%. Wall Street's Dow Jones average rose 410 points, hitting a new record, closing at 27,332 as the odds of a July interest rate cut have increased. But here's a concern. On February 8, 2016, candidate Donald Trump said the stock market was a big, fat, juicy bubble when it was 16,205. We're up almost 70% since then. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.